Hi guys, Kelvin here. Welcome back to my channel. If you have been following the stock market, about 2 to 3 months ago, it crashed and just almost immediately, it recovered, going like few weeks, and right now, it seems like that big crash was just an error in the matrix system. The stock market has already recovered back to the October 2019 levels, and it seems like everything will be alright after all. However, I'm not celebrating right now, and I'm becoming more and more fearful. In fact, I've already liquidated some of my stock positions. In this video, I will share with you why I am so pessimistic even though the stock market has gone up by so much. I will also share with you what kind of stocks you can invest in during these uncertain times. But first, if you are new here, do subscribe to my channel. I post every Monday talking about personal finance stuff like credit cards and investing. Tap the bell button to get notified whenever I post a new video. And without further ado, let's start. So here's why I'm pessimistic. In my previous video, I shared with you 3 reasons why the market could go down. Number 1, the virus situation could become worse. Number 2, the unemployment rate will worsen. Number 3, GDP will become worse. And I also shared 3 reasons why the market could go up instead. 1. Market has already priced in all the bad news. 2. The Fed will intervene at all costs. And 3. The economy will restart soon. Now, as expected, the virus situation did become worse, and more people are getting infected every day. Unemployment rate is still going up, and currently in the US, about 14% are unemployed already. Remember that we are only 3 to 4 months into this, and we are still not at the peak yet. Unemployment rate will still worsen, businesses will still shut down, perhaps even reaching 25%, beating even the Great Depression. And when people have no job, they have no income to spend, and it is already causing the GDP to decline by 4.8% in the first quarter alone. While it's all doom and gloom all across the world, meanwhile, we still have people refusing to wear masks, and is still flocking to the beaches. I don't want to get too political here, but these people deserve a good tapiku, like how the dad will cane his children when they are naughty. Because of people like this, the virus situation will still drag on for a while more. So while one of the reasons I gave was the economy could restart soon, but I actually can't see how the economy could possibly recover from this in the short term. Which brings us to the question of, why is the market going up so fast? It is due to the other reason I gave. The Fed is intervening at all costs. In March, they gave out a 2 trillion stimulus check, activated unlimited money cheat code, and now they are planning to give out another 3 trillion stimulus package. And that is why the market is recovering so fast. The Fed is using future money to pump into the present economy. If you watch Infernal Affairs or 无间道, there is a quote, 出雷行,起走有晚, which loosely translated as, whatever you do, sooner or later, there will be consequences. I understand why the Fed had to do this, because people are losing their jobs and businesses are shutting down. The Fed had to pump in money to move the economy. However, by doing so, they are just delaying the current problem into the future. Even Warren Buffett himself is worried that there will be extreme consequences from all this money printing. Maybe the inflation rate will spike, or US will spiral down into even more debt. Whatever it is, the current stock market is being supported by future money. Ask yourself this, if the situation continuing to worsen, how much more can the stock market go up? 10%? 20%? On the other hand, what are the chances the market will reflect the true situation and come back down? To me, I feel like the market has a much higher chance of crashing back down rather than going up. And since I'm pessimistic about the stock market right now, here's what I've done. So, in my previous videos, I've shared with you that I've invested in the Singapore REITs, Singapore banks, and index funds. I've also mentioned that among these stocks, I feel 2 of the stocks were bad, and during these uncertain times, I've decided that I should liquidate all the bad stocks and only keep the good ones. The first stock is First REITs, where the sponsor is involved in some bribery scandal. On top of that, the management has also not been acquiring new assets, causing the dividend payout to be stagnant for years. So, I've decided to cut my losses and sell away First REIT first. Next, I was also holding Fraser Logistics and Industrial Trust. It is a good REIT, really. if you spend in Australian dollars. Even though the Australian dollar dividends has been steadily increasing, Australian dollar to Sing dollar has been continuously dropping, causing the Sing dollar dividends to drop quarter by quarter. And since I don't know when the Australian dollars to Sing dollar conversion will stop dropping, I've decided to just sell away the stock. I've also sold away some of the index funds which I've just bought recently because they weren't giving me any dividends. I prefer to just liquidate it and just buy back when the crash does happen. For the rest of my stocks, I'll be keeping it because they are still giving me a steady income and they are still fundamentally strong. Now what? I've already identified a few stocks which I feel will do well during this period, and here's my recommendation. Number 1. Mapletree Logistics. One look at the name and you know what is the main business of the company, and it is planting maple trees. Just kidding. The company operates logistic assets. Ever since the virus situation happened, many businesses weren't doing quite well and they had to cut their dividends. But incredibly, Mapletree Logistics is doing okay. In fact, they have increased their dividends by 1.2% year on year. Not only this quarter, the company had been steadily increasing their dividends most of the quarters. As a matter of fact, the company had done so well that it will finally be added to the STI index. Yes. Management is really good, constantly looking out to acquire new assets to improve its profit, which in turn will increase its dividends. Mapletree Logistics' success is tightly linked to Singapore's success. As long as Singapore does well, Mapletree Logistics will do well too. As of 31st December, the REIT had a portfolio size of 143 assets in Asia countries like Singapore, Hong Kong, Japan, Australia, China, and so on. Its dividend yield is about 4.5%. I'll be adding on to this REIT regardless of its price ups and downs, as I believe this REIT will do well in the future. The second stock, Ascendas REIT, another super quality REIT. Ascendas operates industrial and business assets. It is Singapore's largest REIT and has over 200 properties across Singapore, Australia, UK, and US. This REIT is also tightly linked to Singapore's success. So as long as Singapore succeeds, this REIT will also do well. The management is also very active, constantly acquiring new assets and recycling old properties. The good thing about this REIT is that more than 50% of its monthly gross revenue are being contributed by resilient industries like financial services, government sectors, data centers, and biomedical. So the REIT is actually quite immune to the virus situation. Nice. Its dividend yield is about 4.7 currently, and same like Mapletree Logistics. I'll be adding on to this stock because it will give me a steady passive income stream. Number 3. DBS. DBS is a really good bank, so good that it has been named Best Bank by Euromoney magazine in 2019. The good thing I like about DBS is they have businesses all over Asia, so it is well diversified. Unfortunately, the bank had a 29% profit decline due to the virus situation, but it has managed to maintain its dividend payout. In fact, DBS has steadily increased their dividends over the years and it is giving currently about 6%. Do consider DBS if you want a really strong dividend stock that will last you a lifetime. Number 4. SSLK. SSLK is an index fund that tracks technology companies in the United States. The good thing about an index fund is that instead of betting that one company will do well, you are betting that the entire sector will do well. In this case, I'm betting that the technology sector in the United States will do well. An index fund is also self-cleansing, which means that if a company does not do well, it will be kicked out of the index fund and replaced with another better company. So you actually do not have to manage an index fund. It does all the job for you automatically. SSLK has all the good stocks like Microsoft, Apple, Visa, MasterCard, Intel, and others. Unlike all the previous stocks, SSLK is an accumulating fund, which means that instead of paying out dividends, it reinvests its dividends. The reason I invest in this fund is I believe that tech will play a large role in the future. Every part of our lives is very much tied to technology already. From the moment we wake up, travel to work itself, ordering a lunch, and so on. As such, I believe that the performance of this fund will do very well into the future. Just look at this chart. Even before the virus situation happened, SSLK is already doing better than S&P index fund, so do consider SSLK if you believe technology will do well in the future. Number 5. Tesla. Yes, it is the one and only Tesla. Regardless of all the bad press surrounding Tesla, I believe that Tesla has a very bright future. Number 1. Tesla has already dominated the US market, UK market, and is planning to expand into China. 2. The company has just turned profitable just recently, and it is already building new factories to meet its ever-increasing demands. The company also expanded its product lines to other market segments like the Roadster, a premium sports car, Tesla Semi, a truck, and the Cybertruck, a smaller version of the truck. Number 3. The company is way ahead of competition. Tesla had already achieved 3 billion autonomous miles, while its competitor like Waymo had only 20 million autonomous miles. On top of that, Tesla's autopilot hardware is 6 years ahead of competition. Number 4. Tesla's autopilot technology will create a whole new industry. For example, self-driving will mean that your car will become a taxi, going around picking up people when you are not using your car. So in a way, your car will become an investment rather than a liability. One thing to note, Tesla stock is super volatile, and you should only invest in Tesla if you plan to hold it long term. In the short term, it is very hard to predict where the stock will go, but in the long term, I believe that Tesla will do very well. And that's all for today. Let me know down in the comments below what are your plans during these uncertain times. Like, share, and subscribe as I'll be posting new videos every Monday. See ya!